In this video, I'm going to cover the whole entire market in terms of Dow Jones, S&P 500, Nasdaq, 10-year Treasury, economic calendar, investor sentiment, and as well as the inflation numbers. Because this week's pretty important. We have the two inflation numbers coming out, CPI and PPI, on Wednesday and Thursday. Plus, we have the FOMC Fed meeting at 2 p.m. And they're going to be giving a future outlook as well, plus to make a decision, so on and so forth, on interest rates. So it is an important week overall. And I do want to note one thing too. As of today, what was it? Sometime later on, midday kind of thing, I did short the S&P 500. So the reason I'm stating that is in case I am biased in the video, so that way at least you're aware of my position. But yeah, I opened it up today. I'm slightly down on that position just because the market still kept on rising up to the top side. But again, for the S&P 500, the all-time high was yesterday's trading day, and I think we're going to end up heading lower. In my opinion, this is all just my opinion, by the way. I'm not a professional, so please do your own due diligence and research before buying and selling. But I think the markets will be heading down by the end of trading day Tuesday for anticipation for the Wednesday CPI inflation numbers. Plus, on that same day, we have the Fed meeting going on that day. So before I get to the analysis part, I'm going to go over the economic calendar, 10-year Treasury, investor sentiment, and then inflation numbers. And then I'm going to come back and do analysis based off the S&P, Dow Jones, and Nasdaq. So for the economic calendar for tomorrow, Tuesday, June 11th, we have NFIB optimism index. Now, again, the most important thing for this week is specifically, in my opinion, is the CPI inflation numbers, and then the FOMC interest rate decision meeting at 2 p.m. And then we have the Fed, Jerome Powell speaking at 2:30 p.m. So it's going to be eventful for Wednesday. And then Thursday's PPI inflation numbers, but that could be after the fact. Now, the thing is, well, the way I've noticed for the markets, for in terms of inflation numbers and all that stuff, it almost, leading up to it, the market tends to go lower because nobody wants to bet on it, hypothetically. Some people bet on it, but the risk is too high sometimes. But after the numbers come out or decisions come out, it almost looks like the market doesn't even care what it is, and then just keeps going back up or something like that. So just be aware of that potential, even if the numbers don't seem that great or the decision doesn't seem that great. Because, for example, in my opinion, what they're just going to state is there's going to be further delay until the rate cut happens. So that's essentially what it is. And then the market still doesn't really do much, and then all of a sudden starts going back up again. That's what I've noticed. Investor sentiment, this is basically based off American Association of Individual Investors. And as of 6/5/2024, it was 39% bullish, 29% neutral, and 32% bearish. So going to the downside. And then historical average is about 37.5% bullish, 31.5% neutral. So the bullish kind of dropped based off historical average. Neutral has increased, and then the bearish sentiment has decreased somewhat based off historical averages. So 32 versus 31. But nonetheless, the bearish movement or sentiment has increased versus the last update of 5/29/2024. So that is one thing to note. So the sentiment is increasing in terms of the bearish side. It is, in my opinion, is because we're at the all-time highs, and then the Fed is not really cutting interest rates. It's just more delaying it. But we'll see. Again, they're going to give future projections in this meeting. That's why Wednesday's meeting is hypothetically pretty important, right? And they don't always give decisions based off these meetings as well. So this one's decision and future outlook. So there's that. Now, 10-year Treasury is at 4.465%. So slightly increasing, which is kind of strange because the VIX is also increasing, even though it's on the low side, plus the 10-year Treasury is increasing. That was the reason why I opened up a position to short the market in terms of S&P 500, because it's supposed to technically be going down, especially when the meeting's coming up, but it's not always the case 2 days before. Usually it will be probably, to be honest, the last 15 minutes of the trading day on Tuesday. That's probably what's going to happen. And in terms of the interest rate, inflation numbers, the last update is as of April 2024, kind of 3.4% inflation number. And this is by the U.S. Bureau of Labor Statistics, .gov website. Now, the reason why I'm mentioning this, though, is it almost doesn't really matter just because the way the market moves anyway, regardless of what comes out. But the Fed does want to hit their 2% target for inflation. And in their calculations, what they assume, based off the data that they're seeing and all that stuff, is the way to get to that is not to cut interest rates, hypothetically increase interest rates. But the reason why they always say we got to wait for the data and so on and so forth, interest rates will be delayed, like the cut will be delayed until further notice, is due to that they want to see the impacts of the previous cuts, how it's affecting the markets, and if the inflation is decreasing, because then they don't want to hypothetically cut too often, and then it just decreases way too much versus what they want to target, about 2%. So there's that. Now, in terms of breakdowns, I guess I'll do the S&P 500 first. In terms of the 5-year chart and 1-year chart, and I guess this is for QQQ as well. So I'm just going to go over the chart for the MACD line in terms of bearish movement or bullish movement. And what I mean by that, in case you're a new viewer, let's say, so this is a 3-month chart, and it is in bullish movement for the 3-month chart, so more of the short term. But the thing is kind of, for the most part, arching down, potentially crossing over to the bearish movement. And especially since we're all-time highs, I can see that, plus Tuesday, end of trading day, and so on and so forth. So in terms of the S&P 500 and Nasdaq, so I'm going to be looking at SPY and QQQ ETFs for them. And for the 1 month, 3 month, 6 month, they're either crossed over into the bearish movement already, so to the downside, or about to arch down fully to the downside. Plus, given the nature of tomorrow's trading day, yeah, we could pop up to the upside a little bit, but then towards the end of trading day, in my opinion, the last 15 minutes, give or take, it should be going down, because anticipations for the 8:30 a.m. Inflation number coming out, and then the 2 p.m., 2:30 p.m. meetings from the Fed and decision making, and so on and so forth. But anything's possible. I'm not a professional, so do your own due diligence and research before buying and selling. Don't base your purchases off what I'm stating fully. But then in terms of the full breakdown, I guess, so in terms of the 3 month, so this was horizontal. This is a horizontal resistance level. The reason why I have this marked down is because this is roughly about the 531. Right now we're at $535.66. We could bounce off this moving average hypothetically in terms, I'm going to cover the downside and the upside as well, by the way. But for the downside first, there is support about the 534. You can see kind of horizontally here, plus the moving average, so 534. And then it could break down to the 532, some change. But I think it would probably ultimately come down at one point at the 531 and some change, the high 531 and some change, based off the moving average right about here, crossing over with the horizontal resistance. And then if it gets pretty bad, basically it will trickle down to the 530. The reason I'm mentioning 530 is we've seen multiple times support at 530, like as you can see right about here. This is right about here, horizontal 2 touch points at the 530. But then it trickles down to the 529 and some change, plus the moving average right about here, 529 and some change as well. So the first phase, I guess you could hypothetically, if it goes down according to anticipation for the Fed meeting minutes and all that stuff, and the inflation numbers for the next day, then you can see support at 531 and some change. And then later on, maybe if it's a double drop, so it drops early in the part of the day, like slash midday, 531 some change, and then by the end of the day, another drop to 529 and some change, 530, 529. But if it just consolidates around the 534 the whole entire day, and then maybe drops down to 532 and bounces back up to 534, then probably by the end of the day, we'll end up closing at 531 and some change. Because if it doesn't drop too quick, I don't think, it depends. We've seen multiple times the last 15 minutes, it spikes up dramatically, just spikes down dramatically as well. So that is still possible, but for the most part, it would, in my opinion, it would have to come in 2 phases. Now to the upside, we're at, again, 535 and 66 cents for the SPY ETF for S&P 500. And the all-time high is looking at pretty much $536, $537. And based off Fibonacci scale, so that would be first level resistance. But then the Fibonacci scale is about 539, 540. So we would have resistance about that. I don't think we're going to pass those 2 levels that I mentioned. The 537 is debatable. Maybe they want to get an all-time high before dropping down. But the 539, 540, I don't think we'll pass. But that, again, it's just my opinion. So please do your own due diligence and research before buying and selling. Now for QQQ, it's slightly different, because even though we have the same channel almost basically for the S&P 500, this, for the new viewers, just to show it, this is an upward trend resistance line dating back since 2010. So you can see multiple times resistance. Yeah, broke through it in 2020 to 2022, but came back down and then tried to pass it again and got knocked down, and then trying to cross it again. Now the reason why I'm mentioning that is because if you zoom in, if you were thinking to where it spike up, I'm pretty sure this upward trend resistance line for the time being, given the nature that the Fed meeting is the next day and the inflation numbers are coming out the next day, then the limit we're looking at is about $568, $569, give or take. And because my line is not perfect, it could be about 570. So 568, 569 and some change based off my lines, but given the nature of my lines, maybe not perfect, 470. And then we're at right now $464.83. But now for the downside, which most likely will be the case, potentially. Actually, wait, before I cover the downside as well, the all-time high is about $465.74, give or take, around that range, right? Now for the downside, we could bounce off and consolidate around this moving average about here, 463 and 48 cents, which is pretty much where we're at, give or take. And then we would come back down to this level right about here, about 460 and some change, based off this downward trend, horizontal / support resistance line. And then this moving average, which I think what would happen is, in my opinion, for the QQQ / Nasdaq, this would be the lowest. What I'm looking at right about here, just to show you guys visually, let me adjust it fully too as well. Right about here. So this is upward trend resistance / support level dating back since November 2023. Resistance, support, 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 resistance, resistance, resistance with a little bit of a breakout. Collides with moving averages a little bit in this area, general area. So we're looking at support at the 458 and 95 cents or something like that, give or take, 457, and ultimately potentially bouncing off this upward trend resistance / support level above 456. When I checked it earlier, it was about 455 though, give or take. So around the 458 to 455 is a channel area of like support potentially. Now, if it goes down as a double drop, just like I showed for the S&P 500 SPY, which I don't know if Nasdaq will do it personally, just because it could be tech sector. I don't know if it could drop a lot, but I'm not anticipating any of the tech stocks to be dropping too much tomorrow. But I didn't check too many of them though personally. But if it does double drop, then we could bounce off this moving average, which we see support on the horizontal side a little bit for example, this drop, but not too much though, but about 451 and some change. But I don't expect that much of a drop for the Nasdaq personally, but we'll see. Now for the Dow Jones is weird because it's technically showing something different versus the S&P 500 and Nasdaq. So for the 1 year and 5 year chart, the S&P 500 and Nasdaq are showing upside in terms of long term. But for the Dow Jones, it's showing downside, which is kind of strange. And then the 1 month, 3 month, 6 month, it's showing upside. So basically, it's reverse of the S&P and Nasdaq. I don't know what's going on there, but we have this upward trend resistance line and upward trend support level dating back since 2021. Upward trend resistance and then upward trend support. Obviously, we broke through a bunch of times, the whole entire phase, but we saw that the resistance held prevalent right about here. So this is the 2 touch points I showed earlier, but there it's actually 4 when you zoom in. And then we have an upward trend support level that's higher than the previous upward trend support level. And we're technically pointing to the upside. So right now we're at 38,868 points. And I don't think we're going to be passing this moving average, which is about 39,000 points. And then I checked horizontally, there's a bunch of touch points around that price point anyway. And then in terms of support level, we're looking at 38,600 points based off this moving average. But I think that would break and we would go off a horizontal support level about 38,500 points, give or take. But yeah, and then in case if you think we're just going to drop down to this upward trend support level just drastically, you're looking at 38,100 points. And then if you think the upward trend resistance level dating back since 2021 is going to be tested somehow recently, like soon, you're looking at 40,179 points, give or take. But yeah, we'll see. It's going to be an interesting day. It's very hard to predict hypothetically tomorrow towards the end of trading day, and then specifically Wednesday. Wednesday is going to be all over the place personally. And then Thursday could be potentially up and down a lot in the beginning of the part of the day, early part of the day, because that PPI inflation number comes out at 8:30 a.m. as well. So after that, given the way the market has been reacting to inflation numbers, it might actually just end up bouncing back up after that. So we'll see. But yeah, that's all it's for today's video. If you found it beneficial, consider dropping a like. It does help the channel, so thank you so much for that. And if you want to follow me on X or YouTube, I highly encourage you to do so that we can be notified when I do upload my latest videos. And I highly encourage you to check out the latest video because this video could be out of date by the time you watch this video. Thanks again for watching. Appreciate it. And I'll see you guys next video. Peace.